Good evening, everyone. Welcome back to Sudden Wealth Syndrome. It's been quite the eventful week. We had the CPI in the US together with the Fed announcement. And I spoke about this in my previous video. I did think everything would come in line with expectations. I think market was predicting 75 to 80% a rate pause, which is exactly what we got. So markets kind of followed their previous trend, some volatility around the sessions, which is also to be expected. But I do expect actually CPI to reduce further in the next month. One of the reasons is the fact that the way that is presented is over the last 12 months. So because you're comparing to higher numbers, it's more likely that you're going to have a lower number because your base case, meaning the base that you're comparing to in the previous 12 months, is higher. So it's easier to show a lower number. I do believe that a lot of these numbers are very manipulated, but that's not here or there. That's my personal opinion. And what matters is what actually the markets are trading. So everything in line with expectations. As I mentioned, I do believe a Fed pause is more bullish than a Fed cut. I think there are still predictions for 2 further increases this year. I seriously doubt so. I would say maybe one more. I think the reason why they're making room for it is because the PCE, which is their favorite metric, actually came higher than expected this month. So maybe they're expecting some increases in the next 1 or 2 months. I do believe the numbers will probably come better than expected, or at least in line with consensus. So I do expect them to pause rates and to keep them paused for a while. As I mentioned, it's very important. I'm really convinced that if the Fed manages to pause and hold the rates at this level, is actually more bullish than if they would cut. Because if they would cut, that means that something has obviously got broken. Inflation expectations would probably rise quite aggressively, as they would foresee a lot of money printing. So if they manage somehow to hold the rates, keep them here, and nothing truly breaks in the economy, that will probably be the best scenario. Let's see if that can be achieved. In Europe, Europe has actually entered a technical recession, mostly driven by the Netherlands, but you need to be a bit careful because Europe is very different. North, South, East, and West have very little in common. So when people throw around things like Europe is in recession, I mean, it depends on what you're talking about. So you should be very careful with those comparisons. But in any case, I do think the US is better positioned. As usual, they are the reserve currency. They have less imbalances across the country that other countries have in Europe. And here is one of my favorite topics, which is I do believe the US does a lot of wrong things. I do believe they do a lot of very deeply wrong things. However, you need to compare it to the rest of the world. China is back to stimulus policies. Japan never left it. Europe is a huge mess, and they never really stopped QE. They were doing emergency backdoor QE with Southern European bonds. So, I mean, yes, the US is also making a lot of mistakes, but these things happen in relation to one another, right? It's sometimes, and I can appreciate most of what the gold bugs say, for example. However, they tend to think about the world as the US only, and the rest of the world is doing extremely well for some reason, while the US is crumbling to pieces. I do seriously dispute that. I do believe all these regions actually have quite a lot of issues, but the US, in certain regards, is better positioned for certain matters. I do believe for the future, artificial intelligence will play a role that has never seen before. I think we tend to look at things on the S curves for new technological developments, and the internet was already a huge development. I mean, can you imagine going back to the 90s or 80s and actually doing just your work without the internet? Do you even know where to begin? How many hours have we cut? How many time have we saved? How much productivity has been enhanced? It's very difficult to quantify. I do think artificial intelligence is that on steroids. So it's going to be, I think, a very interesting couple of decades. I think a lot of bubbles will be formed around this area. I think I will discuss this a bit in future videos, but I mean, I think we can say it's an exciting time to be alive. Will the stock market hit all new time highs? To be seen. Again, everyone is predicting a recession, second half of the year, some cases big depression. I think if you keep going on YouTube and 99% of the videos are the world is ending by December 2023, then you'll probably not get a recession or a correction to that kind of level. Not a 30-40% correction, anything like that. So to be seen. I mean, no big surprises. I think the Fed is actually saying and telling the markets what they're going to do. If you look at the probabilities before their meetings, they are, I don't know, 9 out of 10, they are very accurate. So it was actually nice to see that the week ended up getting played out exactly as I predicted. Look, these are all short-term things, so I was a bit lucky this week. Probably next week, if I would do this many weeks, I will eventually get wrong. Keep your eyes in the bigger picture, keep your eyes on the big trends, ignore a bit of the short-term noise. However, it's always nice to keep an eye on the markets, and if you have a great interest like I do on these type of matters, keep always an eye out, but don't put too much weight on these extremely short-term moves. So see you guys. See you in the next video. I'll be discussing a bit on the crypto cycle. I see a lot of people panicking as usual. So I'll be making a video a bit later today about it. Cheers, man.